Making your way in the world today takes everything you've got. Taking a break from all your worries sure would help a lot. Wouldn't you like to get away? Sometimes you wanna go where everybody
Good evening, everybody.
knows your name.
For the new folks, and of course for folks that's been here, welcome to the members e-learning. Appreciate everybody being here. This, of course, is Rick. This is Rick stand-in. Hello, Peter. How are you? Okay. A couple things I want to talk about, basically because I had a couple people ask me, and I always I appreciate it when people ask, hey, can you talk about something, or explain this or explain that, because it is sometimes kind of tough to find something to talk about. So I do appreciate that. And then we'll look at some charts tonight. So I hope everybody brought a few charts. We'll look at maybe some ideas, and we'll kind of go from there. So thanks again. Appreciate everybody for being here. I'm going to look at a couple of charts that I like for tomorrow, and we'll kind of move from there. BAS is one of them, BAS. And here's something I look for when I'm picking charts for the watch list. I look for those candlestick signals, of course, and here you can see BAS starts out pretty much obviously in a trend, and pulls back here. Pretty nice little candle here, hammer candle, inverted hammer, and it's not quite a bullish engulf, close, but no cigar. And then we get that doji continuation pattern, which that is nothing more than a continuation pattern. It's just up, rest, and up. And then it kind of did it again. Now this obviously is not a doji, a little bit of a hammer wannabe, but certainly a Hiromi inside day. Well, it opened up above the candle, so it's not a perfect inside day. But still, you've got that same type of pattern here where you're up, consolidate, up, consolidate, up. So that's one thing I'm looking for, are those multi-bar patterns, and this happens to be one of them. I'm also looking for single candlestick signals, and we have a bullish engulf today on this. One thing real quick I should have mentioned this right away, is I want to know what my potential is. I think that's one of the most important things there are when you're looking at a chart, is the potential. Also, if you look at this, well, here's what I see as a potential. To the 100 simple, we have 14%, and that's a very common area to see maybe a little pullback, a little consolidation. But up into this left over here, right up here, there's a 35% move to that, and that's what I'm looking for. I'm looking for the easy road and the easy money. I mean, come on, I'm a guy. That's what guys do. And for 35%, if I could just get 50% of that in 3 or 4 days, a week, maybe 2 weeks, happy camper, I've certainly made the money. So that's something very important I look for. What it also does is, when you look at something like that and you see that type of move, that possible 30% move, that might be just a tad volatile for you too. So it can work against you in the sense that especially if you're a little bit lazy about putting stops on, this thing starts heading down. Just remember that 36% up can be 36% down too. So there is a downside to looking for charts like that. That's why you've got to be aware of what's going on, be aware of the chart pattern and the trend, and don't be afraid to take a little bit of profit off, because it can come back and bite you. But anyway, that's something I'm looking for. So BAS meets that that area that I'm looking for. Another area that I want to look for, and I kind of showed everybody this the other day, and it's no real big secret. I had to shrink it up to get it on here. There's more to the right over here. But all it is just these headings. You can't see them unless I highlight them. They're so small. I can't even see them unless I highlight them. But they do little different things. This is a couple of trending columns I'm looking for. I've got a piercing candle yesterday, piercing candle today, bullish engulf yesterday, bullish engulf today, morning star signal, a little Hiromi here, bull kicker, and then I get into a few different chart patterns over here. The rounded bottom breakout, the pinball, the J hooks, things like that. But one thing I'm looking for, and I've got bass highlighted here. This is in the past 20 days, it's trended at least 10% from 20 days ago to where I'm looking at it right now. That's something I want. I want to see that trend in there. And we have a bullish engulf. It happens to be a rounded bottom breakout. When I set out to look for rounded bottom breakouts, then what I'll do is bring all of them up, and then I'll see what kind of candlesticks are there and go from there. But I just pretty much put everything to start with in the big everything moving up that moved up today, and then I went to bullish engulfs, and the trend came up over here, and you can see how many that fit that trend. Well, it also volume 1.2 times the average 10-day. Today's volume was 1.2 times of what the average for the past 10 days was. So, that I see a bullish engulf with strong volume on it. I better pay attention to that chart. It also fits my doji sandwich criteria, little mark right there. It also fits volume increase over the last 5 days. So it fits that criteria. So that's something I'm going to pay attention to. So here's bass. Well, bass is very likely to be on the watch list tomorrow. And if anyone has any questions about it, please feel free. You're not going to interrupt. I welcome stuff like that. So, and John's asking a great question. And where would you put your stop? I want to talk about something else first, okay, John? And one of the notes I made today, and it was because of some PM conversation I was having with somebody, is never, ever, ever trade more than you can afford to lose. Never, ever trade more than you can afford to lose. Okay? So when you're looking at this particular chart or any chart, where you buy it, where you put your stop, make sure you can afford to lose that money. And the reason I want to say that is because this could be, I could actually talk about this subject probably for 6 hours and answer questions. And I've got to keep it somewhat short here. But it's very important for everybody to find your happy place. And what I mean by your happy place is, are you going to scalp? Are you going to day trade? Are you going to swing trade? We're going to eliminate day trading and scalping for now. Let's just talk about swing trading. Are you going to swing trade? And are you going to work to get stopped out? Some people do that and don't realize it. They really do. Some people start out swing trading and they find a chart. They do all their math or they do all their math or whatever they do to come up with their entry, their stop, and all this stuff. And what happens is they set their stop at a place where it's like asking to get stopped out. And the reason is because they're so afraid to lose a little bit of money. I want to go back to again, never ever trade more than you can afford to lose. That's you hear a lot of people say that trading is not a sprint race. It's a marathon. It's a long race. It's not a lottery ticket. It really is not. So if you go out one day and you say, man, I really like this bass, and seems like everybody else likes it too, I think I'm going to put my entire account in there. And I'm being a little ridiculous, I know that. But that is like a major mistake. 50% would be a huge mistake. Stick with that 1%, 2%, 3% maybe. A common complaint that I get when I say that is somebody says, well, geez, if I only put, say, 2, maybe 3%, 1% might be a little bit little. But if I put 2 or 3% of my account size and it moves up 10%, I'm only going to make $100. That's a common, that's a common, and I get numbers less. I see numbers, only $200, only $500, but we're just going to pick $100. Now I want to stop and think about that. If you could make $100 on an average every day, that's $500 a week. That's, to me, that would be a marathon, not a sprint race. This might be a sprint. What if you could make 10 grand every day? That's a sprint, and we're not even gonna. I think that's just not going to happen right now. We're not going to talk about that. So when you're looking at a chart, you've got to let it work. You've got to let for instance, we look at this chart. I've explained why I like it. I've explained the profit potential on it, about 35%. Now, I would rather get as much of that 35% as possible. I would rather do that than get stopped out. So the last thing I want to do is set my stop. A common place might be yesterday's low. Okay. If you set it there, are you truly allowing the chart to work? See, I don't think so. Well, what about a stop below the T line? Well, there will, I need to make a note here, and I want to talk about that tonight. Let me make a quick note so I don't forget. T line stop early and late. All right. So you could certainly use the T line, but the reality is, are you begging to get stopped out? To me, that's what you're kind of doing. You're kind of begging to get stopped out. I see this chart. Let's come over here and look at the naked chart and get that up there a little bit. Now let's draw some lines on this. I think one of the first lines has to be this trend line down there, and I need to get rid of that one. There we go. So we want to connect the lows. The lows are very important. We want to collect those lows. And then I think we need to look at something for the top as well. So let's just create a parallel line, and we'll just throw this up here. It's not, this top line is not important to me, other than I'm just showing you what the trend is doing right now. I'm just trying to box that trend in. My goal is to get 35% or the majority of that, not to close it out just because it hits this trend line up here. So I look at this chart, I'm thinking, what would tell me that this chart is not working? Well, I could make an argument down here. I could make an argument. It would be below that lower trend line. It would be below this hammer Morningstar type I say type signal here. It would be taking out these highs. Okay, I could see that. So if, say tomorrow, we buy it in that wick area up there, that's a 15% move. Can you afford that? And that's some things that really needs to be looked at. Now I'm not advocating a 15% stop, but it would really help if you were trading with a proper amount of money, and only you know what the proper amount of money is. That's all. No one else knows. No one else knows at all. There's all kinds of fancy tools out there to help you with, well, how much should I invest? Only you know. That's it. And is 3% correct? Is 5% correct? 2%, 1%, 0.5%? Only you know. It can only be, it should only be what you can afford to lose. This is not a we're not playing craps here. We're not playing craps. We're not buy it and I'm rolling the dice for that. That's not what we're doing. You can do that. That's a different type of trading, and a lot of people do that. But you've got to have the correct tools and to do that sort of thing. So what I'm trying to get to is allow the chart to work. If you trust your diagnosis and your what you're looking at for a chart pattern, I think you really should trust it. So, okay, you asked where the stop was. That's where I would put a disaster stop. Stops for me are not, well, I'm going to put it tight today, and I do that sometimes, but there's special situations. Stops aren't generally where, okay, I want to buy that. If it moves down 5 cents, I'm going to get stopped out. That's just, that's like a little guy walking up to a big guy and says, hey, your mama wears big green army boots or something like that. The guy's going to beat the snot out of you. So you're just asking for trouble. So that if you want to know where I would put stop, right there. That's what I would do. That gives this chart plenty time to work. And work for that 35%. That's what I want. I don't want to get stopped out. And I trust what I look for in charts. And I don't want to. I could talk about this, like I say, for another hour and a half. So anyway, there's my idea for that stop on the chart here, and that would tell me when it's no longer working, if it came below this low right here. Keep in mind, this is a volatile stock, so the distance from here to here is a lot. Remember, I said earlier, if you're looking at 35% up into here, just remember you've got that same volatility to the downside. Let's see, do you consider putting stops just below the support line, such as, yes, I do. Let's go back to that. I do use moving averages quite a bit, and I use kind of a combination of them. But I mean, if that might be a little bit of a stretch for some folks, I got to admit. If you were, if you look at the chart now with the 20-day simple on here and the 50 on here, especially if you use crossovers. And by the way, I think crossovers are one of the best chart patterns you can come up with. They're absolutely fabulous if you know how to look for. In fact, somebody needs to remind me. We'll do one night on crossovers and how to trade them. But if you're using the T line and say maybe the 20-day simple moving average, and John, you already mentioned the 20, so you can use any other moving average you want. You don't have to use the T line at all. But if you're using the 20, if you see price coming below that below the 20 and you see a faster moving average chasing it, you don't want to chase it all the way back down. So you can certainly use that 20-day moving average. What I would do is I would use that 20 as a guideline and then come in here and find price support, just what's close to it. So for instance, if I, using that 20-day moving average, if I come over here, I'm thinking this doji here. Let's consider the doji continuation pattern. We have a big candle up, we have a rest day, and we have continuation. So if we had a bearish day that started moving below where that continuation started, that might be a good area for a stop. And there you are, just slightly below your 20-day simple moving average. So if you bought it up here, you're looking at 9%. So we've really chopped that 15% way down into that 9% area. And that's assuming that the buy's here. Tomorrow the buy might be here. We don't know where this is going to open up. So there's two ideas that I see as possible stop areas, and this has to mesh up with your personal likes or dislikes, your personal trading ability, your personal, how much can I afford to lose, things like that. And it really would help if we really took in consideration how much we're trading with. You don't have to make big dollars to make money. You really don't. Trading is definitely more of a marathon than it is a sprint race. Okay, so easy. All right, Claude, if you have a small account, can you not invest 20% of your account in one stock? Would they stop at 1.5 to 2% of your account stop? Claude, let me start with the last part of your statement there. I think if you use 1.5, 2%, you're asking to get stopped out. You're not giving, and this is not, that it's not for every single chart. Sometimes that'll work, but I think all in all, 1.5, 2%, that's pretty darn tight. You could go broke taking 2% stops. You could, and you got to be careful with that. Now, let's take the front part of your numbers there, your question. 20% of your account. There is not any good way I can put it. Please do not invest 20% of your account. Please do not. That is way, way too much. Now, with that said, here's the only one time that I would say it might be doable, okay? And that is if you've got, I'll say, enough money put away somewhere else where that is pocket money, okay? Then you know what? Roll the dice. But if that is your money, if that is your nest egg for your life, if that is your last, whatever it is, last bankroll, then absolutely do not invest 20% of your account. That is just, you just can't do that. You can do very well making $50 a day. See, that's, again, this is, put it in a trading plan. Put it down to what's realistic. Just do the math. And since you said small account, then I'm going to try to use small numbers here. And somebody's going to have to do the math for me because I can't do it this fast. But say you averaged $50 a day profit. Well, there's approximately 210 trading days in a year. That's what I use. And I count mine by, you've got natural holidays, You've got market holidays. You deserve 2 weeks off a year or more. You're going to have some sick days. Um, you're going to have days that the market is really screaming at you to sit on your hands. So for me personally, my plan anyway works out to about 210 days, trading days a year. So um, another thing too, if I could say, since we're on the small account thing, um, if you have a small account, then you need to be dedicated to building that account. And even if it's $50 a day, or even if it's $100 a week, and never ever ever take money out of it to buy whatever. That money is, you have to keep it there and grow it, and then you'll get it to a point where it's very doable, very doable. So I want to leave it with, never put 20% of your account, never. Okay, so let's see. I lost my place. Oh, here we are. Your stops have to be based on your targets too. The bigger the target, the more wriggle room you can give the trade. Thanks, Gigi. Well said. And like I said, I'm looking for 35% here. So I might be willing to give it down into this area here. Now, something else too, and I better talk about this before I forget it. I'm going to delete the T line for a second. And okay, I'll leave it like that now. So when we're drawing trend lines, I drew that lower trend line down here like that. You'll find that a lot of times I will take that trend line and I will move it down like this. I'll move it down to just underneath or right at the 50-day simple moving average. And the reason I want to do that is it goes to the chart pattern I'm looking at. I'm looking at the rounded bottom breakout chart pattern here. So my trend has been, and this is just real quick on the rounded bottom breakout, but this is your trend. Look at the 20 and the 50. Look what they're doing. Down, 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 flat, flat, change, 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 change. So that's what I'm using right there. So if this stock pulled back to the 50, has it changed anything about my chart pattern? Has it changed one thing? Not a bit. I mean, if I buy it up here and it comes all the way back, I'm not exactly going to be a happy camper. But the truth of it is, has it changed one thing about my trend? Not a bit. If you go look at a bullish chart that has been up, that's been up like that, you probably need to draw two lines. One for the top, one for the bottom. And you're going to see that, oh yeah, it's been up, but oh yeah, it's been down. Oh yeah, it's been up, but oh yeah, it's been down. There's no chart out there ever that follows one line and just goes up and 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 up without these sort of things right here. That's all that is. This move right here, did that do anything with the trend? Did that do anything with the chart pattern? No, didn't do one thing. You may not be happy with it if you buy it here, but it didn't do one thing at all. So, and there we go again. You've got to trust your analysis, and that just takes practice. And there's just no way I can't even begin to explain that other than practice, and that will take care of that. So, okay. Thank you, Thomas. 200 a day is $50,000 a year. Let's see. The stop shoppers take me out if I have a hard stop within 5% of price. Twice today, popped down, took me out, went up the next 5 minutes. Yeah, you can go broke playing around with stops, and you really got to watch that. I know there's some educators out there that promote use a 5% stop. 7% is a popular number. That to me is a that's a way to set a stop if you never ever want to learn how to trade. If you just want to buy a chart and set a stop, there you go. That's it. That's about as much analysis as you're probably educated for it. John D, I don't mean that toward you. I wasn't saying that toward you. I was saying it toward the educators that say, well, just put a 7% stop. That's the most common one I've heard of. And what I would rather do is come in here and learn certain things about a chart. Really don't have to learn that much. Learn what lows and highs and higher lows are, or double bottoms. Learn what the candlestick signals are telling you. Learn what, and by the way, when I say candlestick signals, I'd bet $100 99% of the people are thinking all bullish. Think of the bearish. What are the bearish ones telling you? You know, what does this tell you? Is this a shooting star type candle? Sure it is, but what does that mean? Everybody thinks, oh my God, world's coming to an end. Bass is going to go to zero. No, that's not what that means. Not at all. I mean, if you look at this chart, a low, a higher low, a higher low, higher low, higher low. This chart's done nothing but made higher lows. What more would we want out of the chart? I don't think we would want much more than that. And you've got to let that chart work out. So anyway, I kind of didn't mean to get all this direction. I hope it's okay. So let's see. Stalker saying stops best placed on whether the chart tells you a stop should be. And I agree with that. It should. You know, I say this all the time. Why do you like this chart? Once you answer that, then you can answer where wouldn't you like the chart. But you've got to answer why would you like the chart. And if your answer is because this candle, I'm gonna call this a bullish engulf. I don't think it is, but for the purpose of it might be. Yeah, it is. Doggone it. Bullish engulf. I like this chart because it has a bullish engulf. Okay, if that's why you like it, then you're right. You probably should put it right there. And you're probably not really a swing trader. Not truly, anyway. And you're looking for the open run type moves. But if you're, to me, I look at this chart, I'm looking at for the bigger chart pattern. Just like a lot of people, they will look at a weekly chart and they'll use weekly chart setups to find the charts they want to trade, and then they will trade it on a daily time frame or smaller time frame. What they're looking at is the bigger picture. What I'm looking at is the bigger picture just on a daily chart. So I want to look for those rounded bottom breakouts, those continuation type patterns, whether they're J hooks, wedges, all the continuation type stuff. And then I want to make sure that there is plenty room to make money. For instance, what if this was only 5%? I don't want to work for 5%. No way would I look at that. But for 35%, okay, it's got my attention. We'll look at that, and then everything else we've talked about in here as well. So let's see here. There you go, Andy. $50 a day for 210 days is 10 grand. Yeah. If you have a $20,000 account in 1 year, you now have a $30,000 account. So Thank you for that. Thank you. Thomas, my current goal, I'm blessed having not taking a sick day, I think in over 40 years. Wow. Um, Only off for surgeries. That's pretty good, Thomas. And I don't know anyone else here if they know you. I personally know you, and Thomas eats very well and very healthy. Definitely. um, let's see. TOS users can write conditional stops that only trigger at near the end of the day in the time window. The user decides how wide. Thank you, Don. Okay, here. Yes, Thomas, this is a rounded bottom breakout. And where would have been ideal? Well, rounded bottom breakout, ideal is after the breakout. Ideal is you have to look at the chart pattern. Right here is the rounded bottom breakout, and it actually failed the very next day. But if you look at the chart pattern, is this a failure of something else? I think not. Did it close back below the 50? Yes, it did. So, is there a perfect place in here? Right now I'm looking at this chart and I'm thinking the perfect place is going to be on a breakout right there. So I'm looking at trading this chart, and here's something that might be worthwhile. I'm going to use that 20-day simple moving average and just continue that line up. So anywhere in here I think is a buy, and I hope I own it before it breaks out. Let me get the T line back up there. I just realized. There we go. So there's the bass trade. Now I've got another one here. JR. Well, let's do this stim real quick, okay? Somebody asked me about stim today. Stim. Excuse me. Oh, I apologize. Stim was a trade idea on our members trade list yesterday. Now, somebody asked me, PM, they said, wow, Rick, how'd you know it was going to do that? And I just about fell out of my chair. Let's make something very clear here. I didn't have the foggiest idea it was going to do this today. Nowhere, please. Don't anyone think I knew that. Did not know that. If I did know that, I would have been in it. The reason I like the chart yesterday, the reason it was on yesterday's watch list is because of the chart pattern, and I've been talking with somebody here in the room about how do you pick stocks and how do you know which ones to get into, and really you don't. When it comes down to that fine tuning, if I would have known Stim was going to do this, don't you think I would have been in it? You really don't know. Let's do this. Let's move this over and get rid of today. There we go. Now look at that chart. There we go. I think that's a good view of it right there. We're in a downtrend. We have a rounded bottom breakout, by the way. Yes, this is a rounded bottom breakout that failed. So is this right here. We move up and we come back, and look at those candles right there. And rather than look at what Stim did today, don't look at that. There's nothing you can do about it. You can't get it back. What I would do is come in here and look at those candles in there, and look how the trend, the 20, the 50, the price, everything is still trending up. Even though this is down, the trend is still up. Low, higher low, higher low, higher low, higher low. the trend is still working. Work with what you have here in the chart. So let's see. Yesterday, this doji here yesterday. Look at the previous day. Look at that bullish candle. Look at that a hammer wannabe. I say a wannabe because the tail's not long enough. It tried, but nah. But the next day, look at that candle that opened up below. Look at those moving averages. The T-line, the 20, the 100, the 34 EMA is in there. Man, that engulfed a lot of moving averages. That made a statement. And then you had a rest day. That would have been a great entry day. It would have been a terrific entry yesterday. If somebody's watching it yesterday, right there. And if you draw that buy box, and then today, if you had this on your watch list and you were shopping for this chart, let's see, would be Friday. This would be Friday, Monday, this would be Monday. Today's Tuesday. So this would be Monday. So if you were shopping for this, or at night, or during the morning, or whenever you do your work to figure out what stocks you want, you see this chart pattern, you put that box right in there, and literally put that box in there. Draw it in there. Because what'll happen is it'll draw your eyes to it. So you've already decided to buy this. And the market opens, the stock is inside this area, buy it. You've already decided to buy it. What are you waiting for? A penny cheaper here and there maybe? Okay, don't buy a full position right out of the gate. Buy a quarter of a position. That way, if it moves down, you can buy another quarter, marry the two together, add them together, and guess what? You have a lower price now. So if you would have got that, bada boom, man, today you would have been rocking. Look at that. Right there in that box area, right there. Sweet chart. Gigi asks, how come the scanner didn't pick it up? I don't have the foggiest idea. And I didn't see it till late today, and I really don't know why it didn't. I truly don't. And I may never, ever know why. So anyway, it's about taking those, as far as, what to get in. You have to look at you have to do your work, make a very small list, because you can't be in 100 of them. And then when it's in your criteria, maybe your criteria is just to the right of this doji. Maybe your criteria is actually the breakout. Okay, that's fine too. Wherever your criteria is. Maybe it's right here. Maybe it's right here. Then buy it. And then work the chart. Manage the chart. So that's why STEM was on the list. Had nothing to do with I knew it was going to do this. Not even close. Had no clue. But look at that chart. That's just a great looking chart. Let's see. Somebody, Dave, asked for CTCM. If you saw a bullish day tomorrow, you would want the stop around $4. Well, I might make a disaster stop around $4, but at the end of the day, if it doesn't close over the 20-day simple moving average, then there's an excellent chance I wouldn't want it. Because what is the overall trend doing? Once again, let's just look at the 20 and 50-day simple moving average. The 20 has been tracking below the 50, never crossing above it. Got close here, and then down it goes again. It's not close here compared to this. It's still in a downtrend. If the 20 is below the 50 over here and it's part of the chart pattern, which this is, down, really the trend has never changed yet. So being down like this, if it closes below the 50 or below the 20, what does that tell you? It tells you that that downtrend is still very much alive and it's just not ready. Now, you know, how many times have we've been stopped out and the very next day the doggone chart does that? Well, of course, we've all done that. Welcome to trading. You can't nail it every single time. So below the 20, I would be out. But for a disaster stop, I'd probably work with that $4 area, just slightly below $4. And that's in case I'm not looking and it comes down that far, then I would probably want to be out of it because I don't want it to close down there. Where am I? Let's see. Steve is saying Bass looks like it might want to retest 750. Just a second. Yeah, might. Which you know what? We're pennies, so possible. Thank you, Peter. Let's see, those headings in the earlier watches seem like all bullish criteria. Are you scanning for short setups as well? I will when the market, when the market turns to the short side, I'll do the same thing to the short side. But market's bullish right now, so that's all I'm really interested in. And marginal bullish, okay? Marginal bullish. Of course, I have my doubts. Let's look at JRJC real quick. That was another one that somebody asked about, and I said we'd talk about tonight. I had several people ask me. Well, let me back up first. First of all, I bought this stock on this day right there, and I bought it. Oh, I don't know. It was about that price area right in there. Very nice bullish engulf. You know, you can't go wrong. You know, no one can argue with that. At the end of the day, yeah, man, I'm glad I'm long. Somebody else might say, darn it, I didn't get in it. Just a great looking chart on this day. And then the next day, very clear. I thought, hey, this thing is going to make money right away. We're going to do it. Well, look what it did. Went the other direction. As it moves the other direction, take a look at this chart. Did it really do anything to change the chart? Did it do something to drive you crazy? Yeah. Yeah, it did. That's what stocks do. Stocks do that on purpose, by the way. It's planned to drive you nuts. But if you look at the chart, what has it done to change the chart? This pullback here didn't do anything to change the chart. Now, it gapped down, well, didn't, maybe a tiny little, it gapped down a little bit. It came all the way to the 50, but we have to let the chart finish at the end of the day. It starts coming back up, and shazam, look what we have today. Again, did I know that was going to do that today? Nah, I didn't know that at all. All I'm looking at is a very nice chart. I'm looking at a chart with a rounded bottom and a cup and a handle. That's what we have here. The handle has a little bit of jagged edge on it, but I'm taking the bigger picture and then putting my trade plan inside that. So when I see this start moving up, look what it's done. I'm sorry, I've got kind of a mess here, don't I? There we go. That's a little cleaner. What I want to show. Look how we went from below, down here, below the 20, below the 200, below the 50. Okay, the biggies there. We rallied up. Write this down. Rule of thumb. Any time price pushes through a major moving average, don't guess about it. Absolutely know it. that it will retest it. Now, I do not mean that it's going to come back and kiss the 50 or kiss the 200 or kiss the 20. It may just pull back a little bit, but you're very likely. I think the probabilities of testing that major moving average is extremely high. Once again, I'm not saying it has to come back and literally touch it. So that's what we've got. We've got consolidation going on here. That's all we have, the bigger picture. Let's look at a 2-day chart. There you go. Does that chart look better for you? There's a 3-day chart. Anyone ever do that? Anyone ever change the chart to different view of it? This is a weekly chart right here. Come on. So there's a weekly chart. Three weeks of a rally, a week consolidation, and look where we're currently at. Okay, so Thomas, I have 26 stocks on my cell phone watch list. Stim is one of them. I knew it had been moving, but neglected to make analysis. Failed to buy. Hey, that happened to a lot of people. Paper trade JRJC call today. Nice trader. That nice. 42%. Sweet trade. Paper trade. But that's, it's a way to practice the trade, or for whatever other reason, maybe. Very nice. Okay, so before we run out of time here, I mentioned that I need to talk about the T-line, using it for stops and things like that. When you first buy a chart, let's see here. Mill was another one I kind of wanted to talk about tonight, and I'm gonna move this out of the way here. There we go. If I'm looking at Mill, we've got, well, first let me go through a little bit of analysis here. Mill has been up in the last 20 days over, I think it's 10%. And Mill has got a bullish engulf over a doji. Mill has volume increase today over the last 5 days. Mill is a rounded bottom breakout. So, man, fits all my criteria right there. Very nice. We have a big old cup bottom, or rounded bottom if you want to call it that, and now we're putting in a handle. I'm going to call it a cup because we have a handle working here. So we have a nice cup, we have a handle right here. What is a cup and handle? It's nothing more than continuation pattern. That's all. Somebody many years ago was staring at a chart, and they said, hey, this is a pretty bullish chart pattern. I've seen it before. And they were probably holding their coffee cup up, and, oh, hey, look, that looks like a cup and a handle. I don't know. But all it is a continuation pattern. It's a downtrend, basing, or a bottom. It's a rally. That's important. It's a rally, and then consolidation before the next leg up. That's all it is. So I look at this chart. I see these bar bottoms right here, which I happen to love, that sort of thing. I'm thinking I want to be all over this. Now, would I use the T-line for a stop? Why would I want to be stopped out so quick? So in this case, no. I have no interest in using the T-line for a stop. What if the stock moved up like this tomorrow? That's it. Would I want to use the T-line for a stop? Truthfully, no. I wouldn't. I might as well set a 2% stop on there, or 3% stop, something like that. I don't want to get stopped out. I really don't. I want the chart to work. I like the chart because of the cup and handle. I like the chart right now because we've got 1, 2, 3, 4, 5, 6, 7 bars of support here. That's why I like this chart. So where am I going to put my stop? Below this area right here. Not just slightly below those lows. I don't care about the T line right now. So not interested in it. Look what our potential on this chart is. 65% before we start moving up into this resistance area. I want as much of that 65% as I can get. If I go setting my stop so tight, I'm never going to get that. So I want the chart to work. So I'm going to give it a little bit of room to work. All right, so now let's do this. I'm going to have to draw on this chart a little bit. Tomorrow we have a candle that looks like that. The next day we have a candle that looks like that. And the next day we have a candle that looks like that. Now, other than, Lord, I hope that you would take the profits up here. I would hope that nothing else matters. Just take the profits. But if you don't, and let's see here, pen black. I'm going to draw the T line now. T line goes up. T line's going to move up a little bit, but for price to do this, the T line is going to be maybe right here. Would I use the T line for a stop? No, absolutely not. Why would I want this to go all the way down to the T line? I'm going to find some other stop. So, just because the T line's there, it's not always use the T line. I know a lot of people kind of look at it in that way, and they've really built their trading around the T line, but not every chart is T line friendly. And they're not T line friendly when they're just starting out many times or after a big run. They're not T line friendly. You want, let's see how we moved up here, here, here. It's like this stock does this right here. Look how far you are from the T line. Why would anybody, and this just, I'll be honest, and I think sometimes I really upset people when I say this, but this is where just good old-fashioned common sense comes in. You have a bullish engulf, a gap, a big candle, 2 bars of consolidation, big candle, doji, a big candle. What did this chart do? In 1, 2, 3, 4, 5, 6, 7, 8 days, it went up 94%. 94%. I just want to smash my head against the table when somebody has 94% and they don't take the profits. Now, believe me, I'm absolutely guilty of being greedy. We all are. But when you move this far from the T line, I'm telling you, it's going to come back. That's one of the things that the T line did for me a whole long time ago, is it taught me, hey, we're too far away, we better take profits. So in this case, this is not T line friendly. It really is not up here. T line friendly is if we're messing around like this, and you need to, you're trying to make that decision. What do I do? Right there. Okay, you want to be out of it. So so you want to that's where it's T line friendly. Or here we're moving down and we start to roll above it. That's T line friendly right there. So not every chart is T line friendly. This is not T line friendly in here. I'm not interested in buying this over the T line. I mean, I would, don't get me wrong. You know where I'm interested in buying it? And I sort of, which I'm already in it, to tell you the truth. So I'm already in it. But if I wasn't, let me redraw that. Let me redraw that. I'll do it over here. There, we're under the T line. That's where I want to be in it. I want to be in it where those smart guys got in it. Those smart guys got in it. This smart people down here. These smart people right there. That's where I want to be. I want to be with these smart people in here. wholesale buyers. And then when it starts to break out, then you get all those folks that, hey, it's over the T line. Now I'll buy it. Well, you get, now it's making you money up there. So anyway, there's a little bit on the T line there. T line equals rubber line. No, trend line or trigger line is actually what it stands for. Okay, so anyway, I hope that was a little helpful tonight. I didn't mean to string it out so far, and I've got a couple of PMs up there that um, I'm going to bring this back down and kind of answer that. You know, I've had a lot of people ask about this, so I'll tell you what I'll do. It's going to take me a little bit, but I'll get this set up so anyone has TC2000, you can have it. And I probably need to clean it up a little bit as well. So I'll do that, and then I'll make sure that everybody that wants it can get it. And so we'll do that. I don't have a problem with it. There's nothing secret about it. All I did was take individual scanning windows and add them into columns, and that is so easy to do. And one person here asked me how I do that, so what I'm going to do is come over here and just, there you go. Now say I want well, candlesticks. I just type in candlesticks. Maybe here's one, bullish engulfs 9 days ago. So I can come over here, just click on it. There's bullish engulfs 9 days ago. So it's real easy, to do that. But like I say, I'll make sure I get that kind of all organized. It's going to take me a few days to that, but I'll do that. I like a checklist. If you see lots of those things in your favor, then that stock has potential. Yeah, it does. And another thing too is using the candlesticks as your. Here's one of my favorite things to do, is I come over here and move everything this way, and then we'll use this one here. I always want a trend, so I want to put that in, line up all those in a trend, and notice we're still from high to low. I'm probably not going to be interested in MDR. I'm not interested in a stock that moves up 27%. I'm not interested in STEM. That's way too gone. So what I'll do now is, all right, let's take this and let's look for piercing candles that have made a trend. Now think about it. If it's been up 10% in 20 days, the only way it can have a piercing candle is if it's pulled back. So I think I can draw on here. Let me try this. So this right here gives us this right there. The piercing candle gives us this. We had to start down here. We had to. There's no other way. That's what a piercing candle does. It opens low and closes up. So just keeping that in mind, let's go see what that faux looks like. There you go. Do we not have a trend? Do we not have a piercing candle? Would this be an excellent area for reversal? I think so. So that's how I would use it right there. So let's bring this back up and let's look for bullish engulfs. I think there's a lot of those. This is how many from here up fits the criteria. And that might be more. I don't know. You can always adjust by price. I don't think there's a lot of people here that trade $123 stocks. So, from there you might look at rounded bottom breakouts. So let's do that. Let's take rounded bottom breakouts. That's going to be my focus. Rounded bottom breakouts. Let's see. There's bullish engulfs. There's a Hiromi. Let's see. Do we have any piercing candles? There's 3 rounded bottom breakouts that meet my piercing candle criteria right there. So that's how I do that. No, not. I mean, it's no real trick or anything. Let's see here. It's like oh, we already did it. Yeah, it's like a chest list. Do you use custom PCFs or I use mostly custom. There's a couple of TC2000 I use, but all mostly custom. Rick, where do you post the scans? There's some of them on the member side. I mean, if I put all my scans up there, good Lord, the website would blow up. But I'll like I said, I'll make sure that all those are there. Everything that I use. It's going to take me a week to get it done, but I'll make sure I get that done as promised. And then where it'll be posted on the website. I'll have to set something up there. Rick, do you in your master plan always look at the weekly? No. That may give you additional vision, memory wisdom, such as mill. No, I don't. And RA, the reason I don't is there's just facts about my trading I've accepted. Okay, I'm a short-term swing trader, and I mean I know not everyone is the same, so maybe the weekly might work for you. I'm a short-term swing trader, and I'm more than anything, I'm a profit trader. Let's go back to JC JR. I sold mine today, by the way. Oops, JRJC. There we go. Why in the world would I sell that? Somebody might ask, and somebody did actually ask me today. Why would you sell it? And this is very likely to be on the watch list tomorrow, by the way. Why would I sell it? I'm a profit trader. This is why right here. Whoops. Let's do something different. Let's make it green. There we go. That's why. I'm not here. It is not my job to pick the bottom or pick the top. That is not my job. Nowhere in my job description is that the case. My job is to make dollars. Simple as that. 18 and change was today. Not a bad trade for 5 days. So that is simply my job. To be a profit trader. So that's why I sold it. As Bob says there, I can always buy it back. And let's think about this. What if this chart gaps up tomorrow, up to the top of that gray box, and I buy it there? I protected some big dollars today, and all it cost me was 2.77%. That's it. That's cheap insurance. That is very, very cheap insurance for the possibility of doing this tomorrow. And here's some reality too. It opens up, you're up a bucket of money, and it moves down. You start running through intraday charts, and you start looking for reasons to keep it. Oh, that's okay. It's going to stop here. Oh, it'll stop here. Oh, it'll stop here. It'll stop here. It'll stop here. Look, we've all been there, and it's just something I get, and I've solved the problem by being a profit trader. So rather than turn all that into a possible, I'm not saying this is what's going to do tomorrow, but rather than take that possible loss, why risk it for and I of course I don't know that it's going to gap up tomorrow. I don't know if at all or how much, but for the purposes of our drawing, for 2.77% of insurance, that's pretty cheap insurance. So, okay, I do want to look at the market really quick here. Look, we closed up over the T-line, nice little doji up here. Everybody that was in the room, you know that I bought some TZA going into the close and I held it overnight. The fact is, the market's not looking so sweet. Now, there's a whole night ahead of us. A lot of things can change. Right now, the SPY's sitting at 210.72. IWM 122.41. So we're down. We're playing around underneath the T-line for the SPY. We're playing around underneath the T-line for IWM here. If we take a look at the 30-minute chart, look at that 30-minute chart. The other day I was talking in the room on how I used the 34 and the T-line on my intraday charts, mostly the 30-minute chart. I just love this chart. We're in a downtrend now, and I'm basing it strictly on what is the T-line doing in relationship to the 34 EMA. We're in a downtrend. We're in an uptrend here. I want to take a look at a longer term chart, the 2-hour chart. That's my longer term chart. Look how we've made a bear flag, and look where we are right now. Let's look at a 4-hour chart. This is another chart I kind of like, and you can see how we're below the T-line. We're headed down toward this level right here. So, you know, if we don't do that, I don't know what that's all about. There we go. If I'm not like on this bearish kick here, but I think we may have a little consolidation, little rough edges to rub off. So let's be a little careful over the next couple of days. Don't be don't be one of these people. Hey, up we go and never have pullbacks. The truth of it is, if we start moving back at all, 80% of your stocks are going to move back. So be a profit taker. Take those positions off. Get rid of some of those weak ones that just aren't working out. Allow the chart to set up again. If we have a pullback, that would be the most healthiest thing for this market I could think of. And right to this level, that would be nice. Move down, put in some reversal signals, and start moving back up. That would be really, really nice. I just want to make sure I take my money right here. So like I said, I did buy some TZA. We'll see what happens. It may be a big mistake. It wasn't anything to... I'm certainly not going to win the lottery on what I bought. But it's so far it's working out pretty good. TZA's green right now. So all is good there so far. We'll see what tomorrow brings for the rest of it. All right. Hey, I want to say thank you, everybody, for being here. Absolutely appreciate it. And thanks for taking the time out of your evening. I'll get this recording loaded up. It won't be loaded till tomorrow, but I'll let you know when it is. Okay, everybody, take care. Good night. We'll see you tomorrow.